because 90% of the S&P 500 is now reported. But we still have a lot of small and mid-cap companies that are going to be coming in the next couple of weeks, as well as the retailers. So there is still a lot going on with earnings. And some of those small and mid-caps are recent IPOs or SPACs over the last year or two. What's going on with them? Things seemed really hot when they came to the public market, but now it's not. And these shares are mostly down, but are there some deals in there? I picked out 5 stocks that you want to watch this week, including some of those recent IPOs and publicly traded companies, and includes one big cap because there are still some of them reporting. Let's dive right in and see what are the key earnings charts you need to watch this week. So the first stock out the gate is Coinbase, ticker COIN. And as you can see, it actually does have 2 earnings beats on its chart since it came to the public market in 2021. And so that's not too bad, but it does have the big miss from last quarter. And as you can see, these shares have plunged down. Earnings are expected to fall 158% this year to a loss of $8.46 versus a gain, positive earnings of $14.50 last year. Revenue also expected to be down about 50% year over year. So it shouldn't be surprising that these shares are down about 60% year to date, but it is getting a little bounce off of those lows right around $50 there. And the shares are up almost 80% in just the last month. So a lot of people are trading this stock instead of investing in it. And so that's going to make it more volatile. And we'll see what they say this quarter. But the cryptocurrency market still is not all that great. And so that's going to affect a company like Coinbase. So this is definitely one to watch this week. Then we're going to switch over to Roblox. Now, this one also came to the public market there in 2021. Not quite as good a track record with just the one beat there late last year and then mostly red. Roblox also expected to see earnings down, but just 5% here in 2022. But it lost 97 cents last year and is expected to lose $1.02 this year. And then in 2023, analysts expect it to lose $1.14. So not getting any closer to actually having positive earnings. These shares too are off their lows. Nice little rally here, up about 25% in the last month, but still down about 50% year to date. But Roblox, with a huge market cap of 26 billion, this is another one people are going to be watching. Then we had Sweetgreen. This is on the restaurant side. They too came to the public market last year, but similar story here, 2 misses in a row. So they haven't even beat yet since they came public. But earnings expected to do the reverse of the other 2, gaining 72% here in 2022 because the restaurant outlook is looking much better, right? They're now opening. They are not seeing as many closures. People are returning to the restaurants. Some of the Sweetgreens are in the business districts where some employees have come back. So that's a positive for a company like them. Earnings still expected to be negative, however, at a loss of $1.54 versus a loss of $5.51 last year. Analysts still expecting a loss in 2023 of $1.16, however. But these shares down almost 50% year to date. They too are getting a nice little boost over the last month, off those lows by 27%. But is this a temporary boost for all these companies? Have we seen the bottom? No one knows. But Sweetgreen should be interesting on the restaurant side this week. Then we're going with the big cap, Disney. This is one everybody's going to be watching. Ticker DIS, of course. They have beat 2 out of the last 4. They have a pretty good earnings surprise track record, especially during the pandemic when we all switched to streaming, which they launched with much fanfare. But a lot of people have been canceling the streaming now. So these shares have been on the decline. Also, in good news, their parks have mostly reopened, but not in China and Hong Kong, where they're still seeing some COVID restrictions and closures. That's going to impact as well. So, still kind of a mixed picture with Disney. Unclear exactly what they're going to report this quarter. Year to date, the shares are down 29%. They too are off those lows, up 13%. They're not paying a dividend still. They cut that dividend as soon as the pandemic hit there in 2020. So it's been a couple of years without the dividend. Will they be reinstating that soon? That could be big news. Shares aren't altogether cheap, even with this decline, still with a PE of 27. And so this one is going to be interesting on many different fronts, and we'll all be tuning in. Then I'm going to wrap it up with another recent publicly traded company that came to the market also in 2021, ARHS, ticker ARHS. If you've bought furniture in recent years, you may know them because they are a furniture retailer. They do compete against RH and Williams and Sonoma, like the Pottery Barn brand. And so they've had a great couple of years during the pandemic. They were pandemic winners, right? But now everybody assumes that furniture sales is going to decline. Earnings are expected to be down this year by 10% to 62 cents from 64 cents last year. So that's not a terrible decline given how hot it is. A lot of these furniture retailers at record sales. So it does have the good track record of beating with those 3 green arrows. So this is a different one than Sweetgreen, which has had only misses. They've had only beats. But year to date, shares are down 53%. These two are off those lows for the summer, up 25% in the last month. But again, remains to be seen if this little mini rally is going to sustain itself, if that was the worst of it. Shares are cheap. They actually have a PE. Forward PE here is just 9.7. But is the furniture trade over? We will see this week. So there's still a lot going on this week and the next couple of weeks. A lot of these kind of smaller companies that recently went IPO or SPAC and are now publicly traded have interesting stories, and their stocks have been beaten up. So I'll be tuning in with a lot of these companies and the retailers. We're going to get a bunch of those coming up, and they will tell the story. What's going on with the consumer? What's happening with the economy? You don't want to miss a single episode of the Earnings All Stars. Be sure to subscribe at Zacks.com/YouTube to get them all. I'll also be tweeting out a lot of charts during this earnings season. So be sure to follow me on Twitter, just at my name, at Tracy Reineck. And as always, I'll see you again next time with some more earnings charts.